Hello guys, this is Nick from forexfornoobs.com, and in this video I'm going to be showing you my step-by-step process for taking trades. Before I get into this video, I want to ask you to click the thumbs up button, please. You don't have to click it right now, but if at any point in this video you decide that you like this video, please take 3 seconds or even just 1 second of your time to click the button. If you're watching this on my blog, the thumbs up button will be on the top right where you see that arrow. If you're watching this on YouTube, the button will be on the bottom left where you see that arrow. Okay, so in this video, I'm going to be breaking down 2 of last week's trades step by step. My new charting platform, eSignal, allows me to replay chart data. This is a pretty awesome feature. Usually I prefer to do live trade videos, that way you can actually see me enter and exit trades as it happens. However, live trade videos are not always possible, especially in summer when I trade from my mobile phone a lot. I prefer to be out enjoying the sun than, be cooped up in my house staring at my computer screen all day. So if a trade triggers when I'm out, I can't really do a live trade video on it. Okay, so this replay feature is kind of perfect. I can replay a trade and talk you through it step by step. And today I'm going to be showing you 2 trades taken last week in the advanced course. These are both real trades and they were posted before they triggered. So they're not trades that, I look back and with hindsight I say, oh yeah, I would have entered there. These are actual real trades. They were posted before they triggered in the forum. Now, I've been doing a lot of videos on low maintenance trading recently. Low maintenance trading is about trading large time frames so you don't need to check your charts often and you aren't locked to your computer screen. Both of these trades were taken on the daily chart, so they are very low maintenance. Last week we had around about 15 trades. It could have been 20. Honestly, I lost count. Last week was pretty crazy. We don't normally get 15 to 20 trades per week. Last week was just pretty crazy. But yeah, last week we had, let's say, about 15 trades between 4-hour and daily chart. Now, I'm picking only 2 of these trades because neither of the 2 examples I'm showing you were perfect. I don't want to show you guys simple trades, perfect trades. I want to show you the tougher ones, the ones that were harder to make profit from. So right now you're looking at a G JPY daily chart on New York close. This candle here, this one here, formed on the 30th of June 2014, roughly 2 weeks ago. I've pulled the chart back 2 weeks so you can see this trade from before it formed. And you can get a feel for what low maintenance trading is and how you can trade by looking at your chart only once or twice or 3 times a day. Now, this is a daily chart, so you need to check your charts, your daily charts, a minimum of once per day to see this setup forming. But to be completely honest with you, you kind of want to check your charts more often. I mean, if you can only check your charts once per day, you probably shouldn't be trading. You need to be able to access your charts, but the bare minimum to spot daily chart setups, to spot the setup, you need to be there. You need to check your charts once per day. That's the bare minimum. But like I said, you might want to check more often, especially when price is in an area like this, okay? I'm not going to talk too much about support resistance areas and indecision candles because I've covered that a million times. There's links below this video that are going to link you to more stuff about my strategy. That way you understand the support resistance areas. If you don't already understand this stuff, then you might want to watch that before continuing to watch this video. So this is a resistance area. Resistance areas are full of sellers. So sellers are in this area. Sellers, when price pushes up to here, there's a possibility that sellers are going to enter the market. So when price, like you're seeing here, is pushing into a resistance area, there's a possibility that indecision is going to form. And when indecision forms, that's when we look to take reversal trades. So when price pushes up into an area like this, you're going to want to check your charts more than once per day. So I'm going to start playing this. Now this is going to play at 2 hours every 1 second. So it's a daily candle, but it's going to do 2 hours every second. All right, there it goes. Okay, so quickly we can see that price has broken through this resistance area. So this was a resistance area. We knew sellers were grouped here. We knew there was a possibility that indecision may form. So if you were checking this a few times per day, you would check it when it starts off here. Then you would check it, 8, 9, 10 hours later, and you'd see that it's broken the resistance area. So at this point, you'd realize there's pretty much no chance that that a trade's going to form here. there's not going to be a tradable setup here. So, you've checked your charts once, twice, every, let's say, 4 to 6 hours, and you haven't spotted a setup. So let's keep playing this. It's a little slow, isn't it? Okay, so that's the end of this daily candle. Now, when you check it at this point, 100% sure there's no chance of a setup forming on this level. So now, the next thing you're looking for is for price to push up to this level. So you just check once a day until price gets to this level, or ideally 2 or 3 times a day until price gets to this level. That way you can see if indecision is going to form at this level. This is low maintenance trading. So let's play. Price is dancing around, pushing back down. Ooh, it's going up, going up, going up, but not up that far. So by this point, because this is doing about 2 hours every 1 second, you've checked your charts a few times per day in this candle, and you don't really see anything. You don't see any potential for a setup because it hasn't really reached this resistance area up here yet. So let's hit play again. Okay. I'm going to pause this here. So now price is in this area, this resistance area here. Now this is when you want to start checking your charts more often, because when price is in this resistance area here, there's a chance that indecision is going to form here, and that you could possibly enter a short. I'm not saying you need to check your charts every hour, because remember, it's still a daily chart, and it's going to be at least 24 hours before a setup can actually form here, before a reversal setup can form. So it's not like you have to check your charts every hour or just be glued to your charts, but you need to remember that GBP/JPY hitting into resistance right now. So that has to be in your head that indecision may form and there might be a potential trade here. So check in every now and then on GBP/JPY. Okay, so I'm going to keep playing this. Moving so slowly. Bam. Candle forms. Okay, so this is obviously the next day. Price is dropping down already. So at this point, it looks like maybe it's too late to enter a short trade on the daily chart. I mean, it's dropping down. Potentially you missed the trade, which can happen. I mean, there was no indecision here on the daily chart, so no actual indecision formed. What's happening so far is we went from a buyer controlled market, buyers controlling price, to sellers taking control of price and pushing down. Now they haven't pushed down that far. Obviously there's still potential for a trade to form here, but this kind of means, hey, no indecision has formed, so we didn't get the setup we're looking for. But let's keep playing. Ooh, it's come back up. And there we go. So this was Friday, and this was the Monday candle. So, all right, let's look at what's happened here in terms of price action and in terms of my strategy. What we have here is a market controlled by buyers starting around about here, pushing all the way up to here, through this resistance area. So through this first resistance area, buyers were in control of price. There was actually, I think, possibly a trade at this resistance area here, short trade. But the second time it came through, this time here, the time we're looking at, it broke straight through it. So that indicates that buyers are in complete control of price. They just pushed through a resistance area, an area with sellers in it, as if it was nothing. But then they get to this resistance area here, and what happens when they're at this resistance area? Now, this is kind of the exciting part. I mean, this is not a perfect indecision candle. Usually we don't really look for indecision candles like this because it has a long lower wick, so that makes the risk reward ratio a little bit iffy. Generally, we look for different kinds of indecision candles, but this is still a tradable indecision candle. And remember how I said I wanted to show you trades that weren't perfect? That's why I'm showing you this one, because the indecision candle is not perfect, but it's still tradable because risk reward is still okay. But this is the exciting part, because this candle here, when you see this form, when you check in on Friday or on Saturday after this candle closes, you check into your chart and you see this candle here. Now, when you see this candle here, you say to yourself, okay, indecision is forming on top of an area of resistance. This is an area of resistance. It was there before price even got there. And we know that there are sellers here. And we went from a market control by buyers. So buyers were in complete control of price here, 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 here. And then they hit this resistance area, and all of a sudden that forms. This area that we know for a fact in this area there are sellers here, and that thing forms there. That indicates to us that sellers are fighting back. Sellers are trying to take control of price. Sellers are fighting back against buyers. So what do we do when we see something like this? Well, that's why I have these lines up here. I'm going to be showing you how this trade was taken, how this trade was traded. Blue line is for the entry. So the entry would have been placed around about here. Now, if you wanted to, you could have placed your entry a little bit higher. Oops, sorry about that. You could place your entry around about here if you wanted to, but that's a bit of a risky entry. I prefer to enter at the low of the indecision candle. Now, this looks like it might be bad risk reward ratio, but it actually wasn't that bad at all. So that was the entry here. The entry was at roughly the 174.73. Stop loss was around about up here. Now you want to place your stop loss above the high of the indecision candle. Now in this case, it's good that this candle doesn't have a long wick at the top. It's good that this candle's wick is quite short, because you can place a pretty tight stop loss overall. So the stop loss for this trade is 174.73 to 175.34. That's for 60 pips. Sorry, I've been using MetaTrader 5 for a while, and you could just stretch, do a line from here to here with MetaTrader 5, and you could see exactly how many pips. I'm back to doing the math in my head, and I'm not that good at that. But that is 60 pips. Yeah, 60 pips. It's a 60 pip stop loss. So that is the stop loss around about 60 pips. Now the target, the first target, is around about down here. Now the reason for placing the first target here is that this is a support area. This is a strong support area. We know that there are buyers grouped down in the support area. We know there's buyers down here. So we want to close out part of this position before price hits this area with buyers. Because remember, support resistance areas are areas. So this is an area of support. It may not be perfectly accurate. You might find that sellers get to here and then reverse straight away. And you don't want that to happen to you. You don't want to have price come down to here and your target be in here in the middle of the support area. Price reverses from here and then you get stopped out. You don't want that to happen. That's bad. So you place your target just before the support area, just around about here. That way, when sellers come down, they might hit the support area and reverse, but at least you've taken out part of your profit. So that is the first target. Now, second target, it depends. Some people who took this trade had their second target here. Some people who took this trade put their second target here. Now, the reason for putting it here, which I believe was the safer option, the reason for putting it here was because this stuff here. See all this stuff here? This is minor support resistance. This indicates that when price gets up to here, it kind of struggles a little bit. Struggled there, struggled through here. So, that's a sign that when sellers push down through here, they might struggle here a bit. So, you might want to close out your second target here because they might not make it down to here. So, the second target varied depending on who had taken this trade, because this trade was posted to the Advanced Course Forum. So a few people entered this trade. It wasn't just one person taking the trade. So this second target varied a little bit. I'm just going to put it here. I want to put it here because this was kind of like the worst case scenario. I guess this one wasn't hit. I'm kind of spoiling it, but yeah, this one wasn't hit. So I want to show you how this trade could have been taken worst case scenario. I don't want to show you just the best case scenario. Okay, so anyway, this video is already going 15 minutes. I think this video is going to go for 40 minutes all up. Okay, so let's play again. This all happened really fast. Bam, breaks down, and it just pushes down. So, what are you thinking at this point when you're in this trade? Yay, it's broken and it's moving down fast. Awesome. Uh, but what else can you be thinking? I mean, it's going in your direction. Sellers are clearly in control of price, so it's looking good so far. So I'm gonna keep playing this. Yeah, at this point you might be slightly worried, but not that much. I mean, just because price stalls a little bit as it falls down, it's no reason to get too worried. It's pretty normal. That's gonna happen. And then bam, this all happened really fast. I mean, price shot down, first target hit. So first target is hit, and if you have automated targets, or even if you don't have automated targets and you're just trading it, exiting manually, this target is hit. So what happens when this target is hit? You close out half your position, you close out 50% of your position, and then you move your stop loss to your entry. So your entry was around about here. You move your stop loss to your entry point. That way you've locked in some profit. Worst case scenario at this point, after your first target's hit, price is going to come back up. It's going to hit your stop loss. You're still going to have made profit. It's not that fantastic, that profit. I mean, it's not that good, but you still will have made some profit on this trade. So let's keep playing this. Okay, it's struggling at the support area. That's quite clear. See that? See how much it's struggling in that support area? That tells us that this is a good support resistance area. Even though it was broken recently, it tells us that this is a good support resistance area. Price struggled here quite a bit. Let's keep playing this. This stuff like this, okay? Some people get a little too concerned about stuff like this. When price does this, they get a little too concerned, and especially new traders, especially traders who haven't been trading for very long, they get scared when they see something like this forming. Now, I just want to make it clear to you, you shouldn't be scared when you see something like this forming. This is perfectly normal when you're in a short trade. Or when you're in a long trade, it's perfectly normal for it to come back down a bit. It's rare that you're in a trend that is so strong that buyers are in complete control or sellers are in complete control. There's always going to be a bit of a struggle between buyers and sellers. When you see something like this, you shouldn't jump out of the trade. Now, one of the main reasons you shouldn't jump out of the trade is there's no higher high. So a higher high hasn't been made. It's in a buyer's nature to make a higher high and a higher low. So buyers make higher highs and higher lows, sellers make lower lows and lower highs. So no higher high has been made by buyers. You shouldn't exit the trade. Even when a higher high is made, to be honest, you shouldn't really exit the trade. It's close enough to your stop loss that it's not going to make that much difference if you close out here or if you allow it to hit your stop loss. So you shouldn't really jump the gun and get out of the trade. So let's see how this played out. It never made that higher high, and it just kept pushing down. There we go. Okay, so as you can see, had your stop loss been, sorry, your second target been here, it would have been taken out and you would have made some very nice profit on this trade. So with an entry at around 174.73, second target at 173.00, around about 170 odd pips you would have made on this trade. It would have been an awesome trade, but not everyone is going to place their target there because some people are open to taking a little more risk and they want to take a bit of a bigger target. So if you hadn't had your target there and it was down here, let's see how this would have played out. Okay, so this here was the Friday candle on the 11th. So personally for me, what I do in a situation like this is if I have a trade open, even on the daily chart, it hasn't hit its target by Friday. As long as it's hit its first target and I'm exiting still with pretty decent profit, I'm happy to close it out because I don't really like holding trades over the weekend. Not a big fan of it. I prefer to just lock in my profits on the Friday and not hold the trade over the weekend. So at this point you have two options. Close out your trade because it's Friday and it's dancing around here, you're still in profit. You know, you've still made pretty decent profit on this trade, 100 pips by this point. So you can close out your second half here, and that's the trade done for you. Fantastic. Or you could keep it open if you want. Some people kept it open over the weekend. And if you kept it open over the weekend, the trade could still be open right now. I mean, it's at the moment, let's just go to the end of this. Okay, so at the moment you can see it's trying to get back up through this area here. This area is now seems to be acting as resistance. So sellers may in fact take control of price right now and keep pushing down. And whoever had this target here may have their target hit, and they'll get out with a ton of profit on this trade. So, you know, that second target, there's a few different ways it could have been taken. You could have closed it out here on the Friday. You could have closed it out as soon as it hit here, because you had your second target here, or you could just put your second target down here and you'd still be in this trade. Really depends on how you choose to do it. So as you can see, this was a successful trade, but this trade was not a perfect trade. It wasn't a great setup in terms of the indecision candle. Risk reward ratio was not fantastic. It wasn't bad, it just wasn't fantastic because first target was only a little bit bigger than the stop loss. And you know, that's not necessarily a bad thing. I mean, for your first target, I'm completely okay with doing 1-to-1. So my risk reward ratio is 1-to-1 on the first target. So you would have had a 60 pip stop loss and your first target would have been, you know, 70 odd pips. That's a little bit better than 1-to-1. So that's okay. Second target is more like, well, depending on where it was, 1-to-2, 1-to-3. So, you know, the risk reward ratio is not fantastic on this trade. I'm going to be showing you a trade with a better risk reward ratio after this. But overall, this was a pretty decent setup. Risk reward ratio, not fantastic. Indecision candle, not fantastic, but still tradable, still a viable setup. And you can see all the price action steps that went into taking this trade. You can see the nice, strong bullish preceding trend. You can see indecision, and you can see the reversal trend. And you could see how this would have been traded low maintenance. You know, you check your charts a few times per day until this forms. You know, when the indecision forms, you prepare the trade. You have like the whole weekend to prepare the trade and to figure out where your entry is going to be and your stop loss. I mean, the whole weekend, that is low maintenance. You don't have to rush into the trade. Then when the trade's triggered, you have several days. There's no real stress because you don't have this kind of feeling that you have to close this trade out in the next 5 minutes. You have days to plan this trade, and you know, you could take it easy and relax while you're in this trade, which is the great thing about daily charts and 8-hour charts and even 4-hour charts. There's no rushing. So if you guys have any questions about this setup, please ask it below. If you're watching this on YouTube, there's a link to the blog below. Please go to the blog and ask the questions below. Okay, so now we're going to look at the next trade. Okay guys, now you're looking at a EUR USD daily chart, and we're going to look at another trade. Actually, I'm going to push forward a bit because this is not the trade we're looking at. Although this actually was a pretty good trade, but this was kind of like a really nice setup, and it was a really obvious trade. So I want to look at a setup that was a little more complex. So when price reached here, remember this is a daily chart, so this is really low maintenance trading because you know you're checking your candles 2 or 3 times per day until it reaches here. This is when I would start checking it just a little bit more, because when price reaches the support area, you know, sellers have come into a support area. We know that buyers might start fighting against the sellers here, and we know indecision might form, and we might potentially get a trade set up here. So let's see what happened here. I'm gonna push it forward a bit. So you can see buyers, sellers push down, but then they got pushed back up by the buyers. So buyers are obviously fighting against sellers at our support area. We have the support area placed, and it looks like it's working quite well. I mean, we do see some signs of indecision here, really. Let's keep playing. Okay. This candle here, quite small, that indicates that sellers are really struggling to push down. They haven't been able to make a lower low. Buyers haven't been able to make a higher high, so it really indicates there's a struggle going on. Next candle, let's push it forward a tiny bit. So this candle here, now this candle made a lower low. That indicated that sellers were taking control of price, but then they got pulled back up to here. So, it's clear that around here, buyers and sellers are struggling. Sellers keep trying to push down, buyers keep pulling them back up. There's quite a tight struggle going on. And by the end of this candle, you'll see that, actually I went forward a bit too much, that buyers took control of price and indecision formed on top of this support area. So this is our support area. This is the indecision here. And that is a setup for us. I mean, we have what we look for in a setup. We have a strong bearish preceding trend, so sellers in control of price. We have indecision forming on top of a support area. So these are all signs that there might be a potential reversal trade here. Now, when this trade was posted to the forum, it was posted on our pari MT5 charts. So it looked a little different to what it looks like on with this e-signal data. It actually looked a little better on the pari MT5 charts. I'll probably post a picture of it below on the blog, that way you can see what it looked like on there. But obviously that doesn't have a replay feature like this does, so I'm using it on this, showing you guys on this platform. Regardless, the trade is still a good setup on these e-signal charts, and the entries and exits and stuff like that are all still the same. But anyway, so entry for this trade. When I saw this candle form, this indecision candle form, that's when you start thinking about what your entries are, what your stop loss is going to be, what your first targets are going to be. Now, one tip, after you place your entry, which is usually at the high of the indecision candle, so the entry would have been around about here. I didn't mention this with the last trade, I should have. One tip, look to the left. So what I mean by look to the left is you just quickly scan your charts to the left. This stuff here, this stuff here. Now, these things here, these are signs that there's minor support resistance around about here. There's congestion here. Buyers find it hard to push through this area smoothly. So we've seen signs recently that when buyers try to push up here, they get pushed back down. All the way down to there, then it came up, and again they got pushed down. Again they got pushed down. So, this here indicates that price might struggle to get through this area. So when you look to the left, what you're looking for is you're looking for potential spots where price might struggle. That way you could set your first target. When I saw all this stuff here, I decided to set my first target around about here. 136.45, I think it was. Now, this first target was set here because, like I said, all that congestion there. Now, I could have been a little more risky and put my first target here, but that's not a wise decision, because what happens if your trade is triggered, buyers take control of price, they get to here and they meet that same resistance that they've met very recently. What happens? Price comes back down and your stop loss is hit. Bam. You had a trade that was in profit, but it gets taken out. That's not a good thing. You don't want that. So that's why my first target was here. It's a bit tight, but that just means the stop loss has to be tight. As long as you can manage to put a tight stop loss on the trade, then the trade's viable because you still got good risk reward ratio. My stop loss for this trade was around about 20 pips. It was around about here-ish. So the entry, now keep in mind this was traded based on our pari charts, so the stop loss I think was a little bit better because the candle formations were a little different. So I think the stop loss was around 20 pips, but here it's more like 20 25 pips. But, you know, it's still good risk reward ratio regardless, because this target is, wait, let's get a number on this target. 136.05, 136.45. So the target is still 40 pips away. So you still have, on your first target only, almost a 1 to 2 risk reward ratio. Now this is the second target up here. You want to set your second target, just like the previous trade, you want to set your second target just before price hits the resistance area. The resistance area is this area up here. So second target is just before price hits the resistance area. Second target is 80 pips, 80 odd pips away from the entry. So that is almost 1 to 4 risk reward ratio for that second target, 1 to 3 point something. So the risk reward ratio overall is quite good on this trade. Let's see how this one played out. Right, this one didn't move as fast as the G JPY one. I mean, it did move quite fast overall, but it wasn't as good. And also, I should mention, I didn't enter as soon as it triggered down here. I entered around about here, as you just saw when it came back up. That's when I jumped into this trade. Not that it matters anyway. I mean, you could have entered when it first triggered. It would have been the same thing. Okay, so as you can see, the first push up wasn't that much. It didn't really get up that far, but that doesn't really matter. Remember, these are daily candles, so this is happening over a long time. All right, so this, you know, when all of this was happening, I was kind of disappointed that it wasn't pushing up faster. I was disappointed that price wasn't moving up, that buyers weren't moving up more convincingly, that they hadn't taken a strong control of price. You know, I was a little worried about that, but you know, it was still overall good. Ooh, okay. I'm just going to pull this target up a tiny bit because this target was a little bit tight. Because what happened here, when I was actually in this trade, my first target wasn't hit when this spiked up to here. I missed my first target by a few pips, which was kind of annoying because, you know, like I said, I was slightly concerned because of all this congestion here. You know, this stuff, it concerned me. I was thinking, you know, before I entered this trade that it's possible for price to push up to here, come back down, and hit my stop loss. So that's why I set my first target where I did, and it had just been missed by a few pips, which was annoying. Now I say it was annoying, but that doesn't really affect my trading. It's not like I get angry and I make stupid decisions. You know, you need to learn to control your emotions in trading. I was annoyed, but it was fine. As you can see, eventually it did move up and it hit my target, but it had to move all the way back down before it did that. I mean, it came all the way down to here. You know, that was quite, you know, it was easily possible for price to come up to here, right where it did, and then reverse all the way back down and hit my stop loss. That would have sucked. That's what I was trying to avoid. So perhaps my first target should have been just a little bit tighter. But, you know, I don't always make the perfect decisions. You know, I make mistakes too. My target in hindsight should have been a tiny bit tighter, but it all worked out in the end. I mean, that target was hit. The first target was hit. What I did at this point was I pulled my stop loss up to the entry point around about here, and I closed out 50% of my position, and I let the trade run. At this point, you know, I'm no longer worried about the trade. If it comes back down and it hits my stop loss, which is at break even, then fine. I've made some profit on this trade. Not a lot of profit, but I've made some profit. If it keeps going up, then I've hit my second target, and fantastic too. But you know, it wasn't meant to be that second target. As you see here, bam, price comes back down, takes out my stop loss, and we can see the trade. I'm just going to pull all the way to the end. We can see that the trade that the trade only ever hit my first target. Now, this was slightly disappointing, obviously. I wanted it to go ahead and hit my second target, but it's not always going to happen. This was turned around by news. So it was kind of annoying, but it doesn't matter because profit is profit. I was able to lock in some profit on this trade. I got out of this trade with profit, which is always good. It's not as much profit as I wanted, but it was a good trade overall. So I hope you found this video useful, guys. If you found it useful, please hit the thumbs up button. If you're watching this on my blog, the thumbs up button is on the top right. If you're watching it on YouTube, the thumbs up button is on the bottom left. Also subscribe to my channel. If you subscribe to my YouTube channel, you'll get more videos like this. Also, I want you guys to let me know if this video was useful. If this video was useful, please leave a comment on my blog. If you're watching this on YouTube, there's a link to my blog. Go over to my blog, leave a comment, and just let me know if you found this video useful, if you think this is a good video. That way I can make more of these kinds of videos, like maybe every few weeks I could review some of the trades from the previous week. Obviously I'm going to do live trade videos too, because overall live trade videos are better, but please leave a comment and let me know if you found this video useful, because if you do leave a comment, then I'll know that this video was good and I'll make more of them. So thank you very much for watching. I hope you learned something useful. If you're on YouTube, go to my blog. There's a link below, and below this video I've added some stuff on my trading strategy. All free stuff. You can check out my trading strategy. That way you have a better understanding of these trades. See you around the site.